What is the Federal Reserve?
Well, the Federal Reserve uh, is our central bank in the United States, and it was set up more or less to serve as a lender of last resort. There were specific circumstances behind the Fed's creation. The Federal Reserve Act was passed in 1913. There were specific circumstances that uh, led to the perception that such an institution was needed. But they fall into the broad category of lender of last resort. Uh, Actually, and I have an article about this. Actually, what happened was we had laws that strictly limited or prohibited altogether existing banks' ability to issue paper currency, something that was much more important for payments back in the 19th century than it is now. State banks were altogether prohibited from issuing this stuff, and national banks, chartered by the federal government, which were first established during the Civil War, they could only issue currency if it was backed by particular government securities. Well, the government started supplying fewer and fewer of those securities by the end of the 19th century. And wouldn't you know it, we had shortages of currency occurring periodically, bad ones. So the Fed was created to make up for this occasional deficiency of currency by being able to issue currency when the other banks couldn't. It was as simple as that. It would be as if you were a perfectly healthy man who would go occasionally and get some food out of the pantry. And I came along and chopped your hands off. And then I offered my services to you as the food gig grabber of last resort. Now, if I hadn't chopped your hands off, you wouldn't need a food grabber of last resort. You'd be still relying on your first resort hands to get
Yeah.
the food out of the pantry.
It's the
But
arsonist firefighter that the government has
similar,
historically
yes,
been
yes,
best at playing. It's the
that's right. We
yeah.
completely created through our own misguided laws circumstances where the banks couldn't help themselves by issuing more paper notes when they were needed. And then we proposed a new institution that the magic of which consisted of nothing else but being exempt from the prohibitions or limitations imposed on all the other banks. The Fed could issue notes based on general assets. In fact, the way the system was supposed to work and did work for the most part at first was a national bank with perfectly good assets that under different circumstances might have backed its own notes, but couldn't now, would go to the Fed with those assets, and the Fed would buy them and hand over Federal Reserve notes. All it was doing was making up for what the national bank was not allowed to do under the law on its own, with its own currency.
I think one of the things that's interesting to think about and remember is that today Federal Reserve notes are the only base money. They are our currency. But when the
They
Fed
are
was
they
right,
are our currency, but they're not the only base money because banks' credit balances at the Fed, their deposits at the Fed, are also considered part of the monetary base,
sure.
along
So
with the
so the
Federal
digital
Reserve notes,
the did
the digital Federal
yeah
Reserve notes, if you
yeah.
like, because they at any time they can convert those into paper currency and vice versa.
So but the dollars, U.S. dollars are Federal Reserve money. When
Well,
the Fed
that's not
right
quite right. That's not quite right either, because
okay, help me
uh,
understand this.
by most definitions, your check account balance is US dollars too. Those are dollars. They're just private dollars. So,
Okay.
well, we
But
want to,
when they're but if they're converted, if I want to get them as cash,
then you would be converting them into what I do, John, is I speak of the Federal Reserve dollars and private dollars. So, and the Federal Reserve dollars, they are the basis for, or the base upon which other dollars are created.
So Mike, so the Federal Reserve dollars of today, when the Fed was created, was gold, right? Is that correct? That there was, I mean, there was a base money, there was a like the money that was. If I went to the bank in 1914,
Mhm.
I could get gold with my Federal Reserve note.
Yes. Originally, Federal Reserve dollars were themselves redeemable claims to gold. And that continued to be the case until 1933, March 1933. So what you had was a situation then when the Federal Reserve dollars were claims to gold, but commercial bank deposits were claims to Federal Reserve dollars, which could be converted into gold. So you had a sort of a pyramid structure upside down with gold at the bottom of the pyramid. And then you had a layer of Federal Reserve money, and then you had the deposits of ordinary banks built on top of that.
One of the things that gets brought up a lot now um, is the question: is the Fed private or public? And when I hadn't thought about the circumstances of its creation until this conversation, really, in terms of recently. That because in modern today, it feels much more like a straightforward public agency, whereas
Right.
at the time of its creation, at the way you're describing it, it was essentially like a publicly chartered kind of bank intermediary thing that does seem more like a weird hybrid. So help me understand,
Right.
is the Fed public, private, a hybrid? Where does that matter? Where does it not matter?
Well, you're quite right, John. It was more of a hybrid when it was established. You must recall that in the United States, the closest thing we got to a central bank before the Fed was the second bank, first and second banks of the United States, and they were very controversial entities. People didn't, but people perceived them to have too much power, particularly the central bank, which was ultimately squashed by Andrew Jackson. And that strain of American thinking that looked upon a government bank, anything that smacked of being a government bank, as a dangerous thing, that continued right up until the founding of the Fed. So to get the Fed through, they had to do a number of things to package it in a way that made it palatable, particularly to Democrats, because, of course, Wilson was a Democrat and he signed the bill. Yet it was Wilson's party that had done in the second bank of the United States. So what did they do? Well, they went out of their way to make this new Federal Reserve system look different from a monopoly government bank. And they did two things in particular. First, they gave it the appearance of being decentralized. So they were creating 12 different banks, not just one. Uh, and then they made them nominally private. They were privately owned and continued to be privately owned by the commercial banks of the regions they were established in. So these were as it were, this was the makeup that was put over the Fed to distinguish it from something like the Bank of the United States or the Bank of England. Now, uh, the way the Fed first operated, where the banks would just go to their Federal Reserve Bank with their assets, their commercial paper or whatever, to get extra currency, also limited the extent of central control and power, especially while the gold standard was still in place, because ultimately in this system, until 33, it was the supply of gold that ultimately determined, the progress of prices and credit and all those things. And the Fed did not control that. So,
So would you say
uh,
that at that time the Fed really was not doing monetary policy the way we understand
not
it today?
that's right. Its capacity to do monetary policy as we understand it today did gradually grow during this period. It developed open market operations in the 1920s. Uh, it's and The control of the Fed was more and more centralized in Washington, particularly by the Banking Act of 1935. So by the time of the Depression, the Federal Reserve did have a considerable, certainly short-run capacity to engage in monetary policy in the modern sense of the term. Their failure to do so adequately, of course, is one of the main themes of Milton Friedman and Anna Schwartz's monetary history of the United States and their critique of the Fed at that time. Now, once the gold standard got effectively set aside, then you were really moving towards the modern system because, of course, somebody had to be controlling the total supply of money. So the Federal Reserve's powers grew, as did the tendency for power to be within the Fed to be concentrated in Washington. I should state that although the Federal Reserve banks, the 12 banks, were private, the Federal Reserve Board, reconstituted in 35 as the Board of Governors of the Federal Reserve, was strictly a government entity. And Therefore, as the board became more and more influential in Fed decision making, uh, the stockholders, by the way, had no input into the Fed's monetary policy decision making, even though nominally they are owners of the Fed. Then of course the Fed became more and more like an orthodox central bank. So to those who insist on its private nature today, I think one must reply that if, for all intents and purposes, this is a government agency. The banks nominally commercial banks nominally own Federal Reserve banks. They do play a role in electing the officers of those banks, but that's about it. And they receive dividends, that too. But as far as management operations are concerned, as far as the conduct of monetary policy is concerned, the Fed is a government agency, and
The
and no one should be confused about that.
If you like this clip, you should check out the full video and all the other great content we've got at Dad Saves America. So be sure to hit the like button, subscribe, and ring that bell so you won't miss our new stuff as it drops each week.